Monday. Had some really nice price action today. I got stopped out of break even. Nice, love it. So didn't lose any money today, but you know, in hindsight, I could have made a nice amount, but you know, I was basically in the wrong side of the trade. It did go my way for a little bit, but yeah, it's one of those. My own shoe was around here, and before we go any further, look at the weekly chart. We've now come back into this volume imbalance here, and I'm looking for price to continue up into here as previously marked. Lovely. Right, price looking nice. Going to the hourly. What was I looking at today? Well, what we've done, we've taken all of these highs, formed a nice hourly order block to hold bullish above this, and we pushed up. What did we take? These highs, this imbalance here on the hourly. So that's that volume imbalance on the weekly chart. Daily chart is currently looking like this. We've tapped this order block. Nice reaction down there. So today was a classic buy day. I'm going to go into the 15-minute chart. Just have a look at what that entails. So you can see we pretty much accumulated overnight around 12:30 open, around that sort of price. It just pushed up, pretty much just retracing throughout the day, and then coming into the in between London and New York, this imbalance that we formed. So I think this was actually like a 3-minute order block. This pull down, this pullback here before the move up. I'm going to put my drawings back on for reference. So what we have here, let's just zoom out again on the hourly. We have this lovely order block here that we've had marked out on a high time frame, where you can see we've got previous points of interest. We've tapped this 3 times now. You probably expect price to have enough going back down and actually push up, which I can take for future reference. Yeah, that's an hourly order block there. And this grey zone up here is the weekly fair value gap that I'd marked out, and this line, the buy side liquidity line here is the top of this candle here, which was previous daily high, I believe, or the day before that. Let's have a look. Yeah, so we broke this structure here, and this was, you know, the initial draw on liquidity, higher time frame. You got the weekly imbalance, you got these order blocks up here. It's pretty much bloody common sense that we're going up to that point from this optimal trade entry on the fib of the daily range. And yep, we are almost at equilibrium now. I'm not sure have we actually tapped it. Yeah, so we have actually gone up to equilibrium. You see price instantly comes down. We'll probably see a small pullback, maybe take some liquidity around here, back to the 0.62 line, fill in this imbalance here. So this is from, you know, Sunday. So this is, yeah, this gap to Sunday here. So, yeah, we're looking at that. Going into my actual trade for the day. So I know I had this in mind that this was going to be my higher time frame target. My trade is actually down here. I went short just to try and target this order block for the final push before we went up. Yeah, ultimately I knew long term it would go up, but I wanted to catch a nice quick scalp. And going into my decisions on that, let's just zoom this out a bit. So you can see here, we got order block here, price just accumulating in between the session. And then we had, I think, yeah, we got this inverse fair value gap here. I think on the 3-minute you can see it a bit better. yeah, so you can see from start of the day, price is just massively bullish all day, like proper buy day all the way up to this higher time frame liquidity. And so yeah, in hindsight, this should have been my TP here rather than this. I wanted to go for this on the 2.85 to 1 risk. If I'd set it at 2 to 1 risk and just put the stop like right in the middle of this, then, you know, we would have hit take profit and then price would have bounced back up. But yeah, we got stopped out at break even. My criteria for getting into this trade was we had, you know, this movement, accumulation here, pushed up, swept these highs, displaced down on the 3-minute chart. I think on the 1 minute you can see it quite clearly. Yeah, so we closed below this low here, traded back up into this fair value gap. I was watching a little bit just to see what the reaction was going to be, whether or not it was going to come up right away before I got in, or, you know, I wanted to see it come down just a bit more before I got in. And yeah, you know, price pushed down through this inverse. Zoom this in a bit. And I marked out this level here as my break-even area. So at which point my original stop was above these highs, and then I moved it down to here. And then once we pretty much came down here, and my stop was at break-even. So yeah, I was just want to leave it to run, I guess. And yep, price obviously went in line with the higher time frame bias, and, you know, the reaction was bullish. And then what time is this now? So pretty much 9:30. So in hindsight, my setup was a little early, and, you know, I should have anticipated that price was going to come up during this session because of the higher time frame bullish bias. But I did want to see this form. I mean, it kind of did. We had a nice reaction. My mindset during the trade was good. Traded properly, reduced my risk, put stops to break even after we got like a nice push down around here. But yeah, I just wasn't thinking on the basis that my trade was 2.78 risk. If I'd known at the time that this was 2 to 1, then I probably would have just closed it. I was kind of thinking it at the time. Yeah, like I say, you can see on this, price just went for the where are we? Went for the first target instead of the second one. I wanted to see it come down here, basically, with an eventual intention of maybe coming down here. We had this imbalance here, but yeah, it's one of them. So really, I did miss a massive move, but I didn't lose any cash, so we preserved our capital there. So yeah, can't be upset about it. Just a bit bummed out. It's just like, oh well, can learn for next time what to look for. So following this, I drew a fib from, I think it's the bodies of the candles. Is it the bodies of the candles on the 5 minutes? No. So my fib is bottom of this candle here to the top of this candle here. So that's the manipulation range. Didn't do the wick, so I just done it to the body. Oh no, the body of this candle. The price came down here, manipulated, and then because off to the left it's not massively clear. You know how far up into this fair value gap we're going to go. Use the standard deviations as targets for the trade. Yeah, so you can see 3.5 standard deviations right to equilibrium. Bodies of the candle are on point in their reversal. And, you know, we've come into the New York PM session now, so that'll be starting soon. If it's not already started, yeah, 1:30. So I wouldn't be surprised if we maybe see price come down into here for continuation up, or we do then take this order block, this liquidity, come down, fill this in, and then go again for tomorrow. You know what I mean? So yeah, it's one of those. I think I made like what, like half a pip today with my break even. So yeah, literally like 40 something p because we got stopped out at break even. But something to learn from. Be wary of your risk to reward, and if you're trading against higher time frame biases, just be wary that price can reverse pretty nicely or reverse quite quickly once it reaches a point of interest, and it's probably a higher probability that it's going to go for the nearest target than the following target if its bias is the opposite way to where you're targeting. But with that all in mind, yeah, good trading today. Just want to feeling confident going into this week, feeling good, but we also will remain cautious. So yeah, this is the 8:30, this is the 9:30 open, so you can see price accumulation, manipulation, and then just distributes up. You know what I mean? Power of 3 right there. Perfect. Pretty similar in the London session as well. Accumulation. To be fair, this just was going up, set up the framework for this trade. But yeah, like I say, the higher time frame analysis is correct. Like we have predicted, well not predicted, but anticipated that price would do something like this, where it's accumulating here, and then you see the big push up to equilibrium to rebalance. So I guess the next target on the 4 hour would be, top of this imbalance, and then these up here. So it may be the case that we see price come down, fill this candle here, so that yeah, I wouldn't be surprised if we see it, come off this order block, or this one here. After it'll probably like wick down into this maybe, and then head up, or it'll just go straight from this candle. So going into the news for the week, let's have a look what we got. There we go. So today is the 4th. So yeah, 1:45 UK time. So that's like what, 1:45, 12:30, 8:30, 1:30, 9:30. So yeah, quarter to 10 New York time, the news hit. And if we look at quarter to 10, yeah, bang. One of them. But like I say, just continue to look for more setups going through the week. I'm feeling that we could definitely catch some pips this week. Now that we've had the bank rates and FOMC last week, it's a bit more relaxed, I guess, depending on what else is coming up. Tomorrow, no red folder news. Nothing on Wednesday. Oops, what have I just done there? Thursday, GDP and unemployment. So we'll maybe see point of interest around Thursday, and then Friday, core PCE price index. Yeah, so I would expect, we just maybe accumulate for a couple of days, push up here, and then push up on Thursday, and then Friday maybe come back down again on like a small end of the week reversal. But we will bloody see. All in due course. All in due course. Yeah, good stuff.